finance, self-managed super funds, commercial loans, anything related to finance, we can facilitate with your request. If anything is outside of scope and something that we can't do, we do have referral partners who can help within certain scopes in terms of size, complexity, etc. So if there's anything that involves finance, we can pretty much do it within reason. Now, being a broker, we've got access to over 45 different lenders. Now, we're not obligated to any one of them. Now, being a broker, we've got the cream of the crop to pick from, but in today's world, not every lender is going to meet everyone's individual situation. So having the flexibility and the vast range of lenders on our panel does give us options and does accommodate for sort of tricky sort of niche situations as well. Now, especially with house and land, not every bank does land and construction loans. So it's very important if you are currently dealing with a bank that you do day to day and you're looking to buy house and land and do a construction loan, that bank might not be able to do that for you. So it's very much doing your homework, speaking to a broker, speaking to your bank to see if that's something that's viable for you. You've got to be very mindful of that as well. So again, my job is basically to find a solution for you, your lender, find what's in the best interest of you at the end of the day. Just to give you a quick rundown on the market at the moment, this is pretty a hot topic in the media and going out throughout the industry. Things have changed quite a bit since May. Over the last 2 years, we've had the luxury of the banks lending some pretty decent loan amounts based on going through COVID. At the moment, since May, we've seen our first interest rate rise in probably about 10 years, which has basically increased since May. So the cash rate's at 2.6. There is talk of the RBA putting that up even further. There's speculation that next month there will be another rate rise. So this is starting to hurt mortgage repayments at the moment. So, I mean, gone are the days, back in sort of January, February, where rates were at 2%. We're currently sitting at 4.5% on the variable rate. The fixed rate market, if you did not fix your rate before December, you missed the boat. And that is a direct reflection of what's going on in the US at the moment. So, fixed rate lending is kind of stopped altogether. I mean, if you had a variable rate of 2%, you wanted to fix it, you're looking at 4.5, maybe 5, sort of May, June. You're not going to double your repayment. So at the moment, rates are going up. It's pretty much, this is the new norm. So 4.5% is kind of the new norm right now. So this is where people are starting to see their mortgage repayments increase every month. The question is, when does it stop? So, and that's what the RBA are trying to do in the next sort of few months at the moment. Last month wasn't as hard as it was in previous months with 0.5%, they did 0.25. They do have a target in mind, but again, just seeing how the economy does in terms of inflation and people spending. So it's a very interesting time. The borrowing capacities have sort of dropped in terms, and the reason for that is the banks do put assessment rates. So if you want to borrow a certain amount of money, yes, you might get a rate at, say, 3%, but they put buffers on top of that. So if rates do go up to a certain thing, you can still afford to make those repayments. So the benchmarks have actually been reducing borrowing capacities every month, and we're starting to see that in terms of available of lending right now. So if you are looking to get into the market, I'd highly recommend sitting down with a broker, whether it's coming talking to me or the guys at U Financial over there, just to getting an understanding of what your financial capability is now. Now, I will say this, that the figure that you might have today could change between now and Christmas. So every time that benchmark or that interest rate goes up, that does have an effect on the assessment rates. Now, the banks at the moment are having internal discussions with ASIC and APRA in terms of what they can potentially do moving forward, because we are starting to see applications drop. People are waiting to see what's going to go on the market, where they sit. Mortgage repayments have gone up on average $500–600 a month, so that's starting to eat in people's pockets. Plus, we're starting to see cost of living going up. There's talk of energy prices going up. So there's a lot of things that are starting to impact people month to month, which are starting to impact them on financial decisions. So what I'd recommend today is, if you are looking to buy in the next sort of 6 to 12 months, getting an understanding of what your financial position is now, but then also factoring what would rates be if they go up even further, just to keep that in mind. So sitting down, whether it's me or the guys at U Financial or who it is here today, or if you've got someone that can recommend, highly recommend getting that done, because things are changing drastically. I'm not trying to say it's doom and gloom, but just trying to stay on top of things right now. Just to give you an understanding of what's actually happened, I'm sorry to bore you with charts and figures, but I think this is relevant. Prior to sort of COVID hit, we saw that flat line and it dropped drastically. So the cash rate went to below 1%. Now we've gone past pre-COVID, so you can see how quick things have changed since May till the 5th of October. There generally is a RBA announcement on Cup Day. Now normally on Cup Day we're sitting at barbecues, catching with family, public holiday, and we tend to forget it. So they tend to sneak one in there, so just be mindful of that there might be something there next month itself. So that illustrates how quickly interest rates and the cash rate's gone up. So that kind of leads into where the market is at the moment. This is something I just wanted to talk about briefly, is just understanding structuring loans. So those are pretty much three ways you can structure a loan. Now when you're buying house and land, one thing just to be mindful of, you can't fix a construction loan. Yes, there are probably 3 or 4 lenders. So generally if you're going to get a land loan first, if you haven't got a building contract, you get a variable rate because you don't want to fix it, because you obviously have to increase it. Now a fixed rate you can obviously guarantee for 1, 2, 4, 5 years. And that provides a bit of security. Now, if you are looking to do construction, generally fixed rates are not offered until you have completed your house and land altogether. Yes, there are certain lenders that do provide this as a niche policy, but that's obviously subject to the rate at the time. So, obviously, with the variable rates, things fluctuate up and down depending on the bank and the RBA. They're probably the cheapest rates in the market at the moment when it comes to variable. But yeah. So today we're all here pretty much to look at house and land. Now I've broken this up into 2 aspects. Now it's all based on whether you've got a land contract and a building contract. So if you're looking to buy a block of land, you would have a land contract. Now generally the banks would lend up to 95% of that value. Obviously subject to the postcode and the area. Coming back to my point originally before, just bear in mind the lender that you do select. So when you're buying a block of land, you've got to make sure that when you buy that block, that lender also does construction for you moving forward. There's no point going to a lender that does land loan but won't do construction, then you've got to spend time refinancing after that. So it's more paperwork, more time, another hit in the credit file. So it's just keeping up to date with that. Also, just bear in mind that some banks do have postcode restrictions in areas where they will lend to. So just bear in mind the areas, there are sort of certain regions that the banks are not comfortable with based on resale value, but generally most of the time the banks will lend in pretty much all the areas that are pretty much on sale here today. Common question that I would like to just emphasise on as well is with everything that's going on in the market with a pre-approval, common question we get asked is, I'm looking to buy a block of land, I need a pre-approval, but the land's not going to title for 12 to 18 months. Do I get a pre-approval? The question depends on the circumstance. Generally, because a lot can change between now and 12, 18 months based on your financial position, and that pre-approval is only valid for 90 days. So that's an argument of do I get it or don't I? So generally, if you want peace of mind, we would do a pre-approval based on the current assessment position on your financial position, which generally, if you tick all the boxes from servicing, credit scores, etc., you would generally get a pre-approval. Now, that pre-approval is only valid for 90 days. So if it's only valid for 90 days and that title is going to come out in 12, 18 months, it's going to run out very quickly. And there's no point extending that pre-approval because potentially that could be more inquiries on your credit file. More inquiries, credit score depletes, and that has an impact potentially on your lending. So generally, there's 2 ways you can go about it. We can sit down with someone, get an idea of what the financial position needs to be upon that title being released for the land, as well as the construction. Or you can get a pre-approval just to know the bank would lend to you based on that financial position. Now, day is once that pre-approval runs out after 90 days of it being released, that is the minimum financial position that you need to maintain until that title is released. Now, yes, if that financial position changes by, yes, you get a pay rise, more savings, that is fine. If you get another job and it's more income, great, that's fine. Probation's a big question that we get asked about, but generally if you're staying within the same industry, you're pretty good. Now, if the financial position increases, great. If that financial position deteriorates from that point of assessment, that's when you would have to reconsider. That's when things start to get a little bit tricky with finance, because the banks have set you on that benchmark. You need to maintain that upon the titles have been released itself. Just got a couple of quick sort of tips really when you're looking to buy land, just questions potentially. So general question is land, just asking when the titles are going to be released, because that can kind of give you sort of like an end goal date to work towards. Sometimes you do get delays with titles being released, so just factor that into consideration as well, because there are a lot of government parties and a lot of people, independent contractors involved in terms of getting those blocks of land released. Just also bear in mind, once that title is released, generally depending on the contractor and the developer, you've got 2 weeks to settle upon that title being released. So generally the developers and their legal teams will contact you just to say, you know, everything's been subdivided, we're sending all the subdivisions to the titles office who actually prepare your individual title for that block that you do purchase. So generally they'll give you a lot of lead time. The minute that title for your individual block, so you get a title with your reference number, with a title with a volume and folio number, which is your unique individual reference for your block, you've got 2 weeks to settle from the date of that title being released. So generally trying to get things done within 2 weeks in that short time frame can be a little bit stressful, but also subject to the bank's time frames as well. So just making sure you just keep on top of that as well. The last point I put there is obviously from my personal experience. I'm currently building at the moment, and picking a block is probably the most important aspect of when you're looking to build as well. So finding the right block that can fit the house that you want to build on. What I mean by that is, if you've got a desired house that you'd like to build, generally the builders will have a minimum frontage, whether it be 14, 12, 10, etc. in the depth. So you want to find the house that you can put on a block that's going to best suit what you're desiring to build itself. So that's probably a big tip that I've noticed across the years in myself. So, because if you've got a block that's 12 metres wide and the house has to have a minimum frontage of 14, you've got to change your plans. So just keep that in mind. That's probably one of the biggest ones as well. Coming to the construction process, this is where the fun begins. Dealing with builders, building the house you want, it's a very exciting time. How it all works, you have your block, you get your building contract. Once you've got that building contract, that's when we can approach the bank. They'll take that building contract with the valuation and they'll deem the house to be worth X amount, and that's what the bank would lend against. So it's what we call a tentative on completion valuation. The land and house contract together, deem the end value, and that's what they'll lend against. Once the construction phase starts, you'll have what we call 5 progress payments. Now those progress payments are broken down to 5 stages that need to be industry standard. So instead of giving the builder all the money up front, they'll drip feed it based on each stage. Alright, don't take it. Cool, it's all good. Now, that's all fine well from the builder from just drip feeding them, because as they go, they get paid as they go. During the construction phase, it's also important to know that the bank understands you might be paying a mortgage, you might be renting, so that part of the progress payment for the construction becomes interest only. So you're not making full repayments throughout the journey whilst the house is being built until it is fully drawn down. So that kind of gives you a bit of leeway just in terms of monthly expenditure rates, etc. itself. So one important to note during the construction phase, is if you've got a building contract, make sure you put buffers, anything that you probably think of that might be an additional cost during the construction phase, because any variations outside that building contract the bank will get you to pay. So the building contract is the bank's Bible. If that has a set figure and you get a variation because you want to put in, I don't know, an extra room, oh no, sorry, so we want to put in upgraded carpets, timber, add some sort of extension or addition to the contract, that has to come out of your own pocket if it is not in the building contract. So when you're sitting down with the builders, just make sure that you factor in everything that you want. And look, generally they can put most things in the contract itself. Along the way, you might have some slight variations where it might be a couple $100, grand, etc., which you can mitigate. But anything big, just make sure it is in the contract. Couple of key things to note. Generally, most building contracts are fixed price. Just make sure how long that duration is. Yes, there are, over the recent times, we have had extended delays with construction with materials, which is quite known in the media and the industry. So materials have gone up, labour's gone up, so there are extensive delays. So just make sure you communicate with builders and make sure that there is an adequate time until that contract is fixed before you start building as well. Do your research on the builder. Make sure the builder ticks everything that you want to do from start to finish, etc. Progress payments, which is pretty much industry standard, they'll be in the contract. The gentleman who's about to speak after me, this is my next point, just in terms of building inspectors. These guys are worth your weight in gold, just to make sure that everything is built to industry standard. Not anything against builders or anything, but just making sure the quality's up there. First time owners grant is available. This is a hot topic that we get commonly asked across the board. What kind of first time owners grant do I get? Especially with land and construction, you do get two forms of first time owners grant, which is $10,000 towards the construction, which always goes towards the base stage. In relation to the land, depending on what the land's value is, if the land value is $600,000 below and you are a first home buyer, you will not pay stamp duty on that block. So that's two key massive benefits in saving. I mean, $600,000 land loan or land property value, you're looking at full stamp duty is about $30,000. So it's pretty big savings from that point. Another main question that we do get from a lot of first-time buyers, one applicant might have already claimed a first-time buyer's grant, and the other person hadn't. Unfortunately, if one of the parties who's applying for, whose name's going to be the land, on the contracts with the bank or the land, unfortunately, there'll be no first home grant applied. There is a section within the first homeowner's grant form that just does stipulate that, so just keep that in mind. Big one as well, just make sure you get your contracts reviewed as well from conveyancers as well. Just make sure that everything's all hunky-dory in terms of the contracts, the section 32s. Those are probably the big main key points that I'll talk about. When it comes to government grants, I think we've touched about in the first homeowners grant, just to break that down for you guys. So exemptions on the stamp duty. Now, stamp duty up to $600 is waived. However, if you have a land or a property that's from $600 to $750, there are tiered exemptions based on the actual property and price itself. Obviously the FOG, which goes towards construction, that payment is always paid to the first slab payment. So when you get your lovely base stage where that slab goes down, that first homeowner's grant actually goes towards that slab payment. It doesn't go to you, it actually goes towards the builder to the first capital improvement of that property itself. This is an interesting topic in itself. The government since COVID has come out and provided some opportunities for first home buyers to get into the market by using certain government grants. There is a website down the bottom there that might be of interest to some of you. This is where potentially you could buy a property up to with using a 5% deposit. These are all the government schemes that are available. The website down below provides all that information for you. There is certain criteria that is involved to meet these. There's household income measures, you have to be a citizen, and there's a few other recommendations as well, which are all on those websites. Those are available. This is an opportunity to potentially get into the market further. Now just please also bear in mind that not all lenders are associated with these schemes. So the two majors being NAB and CBA are the two who have got available spots within these schemes. The rest of the available spots are with your sort of sub-tier lenders. They're all listed on the website itself, but the two major banks that basically all four just had to present a tender or a proposal to be part of the scheme, and CBA and NAB won that. So there's definitely spots, so definitely go have a look. There might be an opportunity for you to get in the market, whether it be now, later, etc. from that point. Finally, just got some helpful tips just in relation to buying, building, etc. So first of all, just highlighting my first point is just understanding your current financial position in terms of your property price, your borrowing capacity, but more so what your repayments are. At the moment, we're not particularly worried about the transactional purchase. At the moment, we're more worried about what are your monthly repayments going to be. At the moment, the mortgage repayments are going up monthly, so we're sitting down with all our clients just to make sure, what's your monthly expenditure, what kind of liabilities you got going on at the moment, what can you afford, because these mortgage repayments are continuously, they've gone up since May, so we're starting to see some people just starting to feel a little bit of the heat at the moment. So just sit down, create a budget, understand where you're at, and then also sitting down with someone to give you an idea of what your borrowing power is and what you can afford as well. So again, having your contract reviewed, that's probably the biggest one. Most conveyancers and lawyers will do the first 3 contracts free of charge. So generally get them to give a look. They'll go through the contracts, make sure everything's all up to standard, but also anything that needs to be brought to your attention, whether it's land tax, if there's any sort of covenants, estate guidelines, etc. from that point. Picking the right block size. Generally, sometimes you see that there's all the blocks in the estate have sold and there's one, so just generally check the block sizes from that point. What else we got? Fixed price building contracts. Just making sure those fixed price building contracts generally have expiry dates, whether it be 12, 15, 18 months, so just keep that in mind. You don't want to get a block of land that's going to title in 12 to 18 months. You get a building contract that's going to expire close to that, so you might get some price increases from that point. So just make sure the timings are right. Doing your research is probably the best thing I'd probably say to you in getting an understanding of your financial position. At the end of the day, you probably know your situation better than most, and for me to come up and generalise everyone's situation, again, this is why I like this job. Everyone's situation is different, circumstances, having the ability to find solutions to certain everyone's situations, but at the end of the day, it's just making sure you do your homework. If you guys have got any questions, I'm going to wrap up. If you've got any questions, we're at C26, which is just past the coffee shop. Come down, have a chat. The guys from U Financial are also over there as well. They can give you guys an understanding, book an appointment. At the moment, what I would say, regardless if you're looking to do something now, 6, 12 months, 24 months, just get an understanding where you're at now, and potentially we can work out what you're looking to do. We can set those sort of parameters, those goals, etc. But if you've got any questions, please come down. Myself and Jade will be there, Mark as well. We do also have a bit of an inflation giveaway. We give you an array of iPhone 14. We've got a $1,000 Coles Mart voucher, petrol card, food vouchers, etc. But other than that, if you've got any questions, come down, and thank you very much for your time.